taking you in a row after taking charge. And you may remember that the bank has been incurring losses continuously. And we took a detailed study. And then in the Q4 of the last year, we turned around by making a reasonable profit. Since then, the bank is on its path of increasing its profit quarter after the quarter. And for Q4 of this 21-22, the profit stands at 346 crore, taking an overall profit of around 1,039 crore for the year 21-22. And this is the highest ever net profit of the bank. Before we take, I will give you a small presentation, though the detailed presentation is available in the website of my bank and also with the stock exchanges. I'm sure that my friends who are who today might have already gone through, but still I will quickly take a few of the slides for the ready reference information of my friends. I hope that the PowerPoint is visible. Slater?
Yes, sir. It is.
Okay. So this is the highlights of the performance. The operating profit is at 1,330 crore, an increase of 7,228 bips year on year. The net profit is at 1,039 crore, an increase of 13,802 bips, because basically it was a loss during the last year. And you may recollect that I was telling that the bank has consciously decided to shift its business model towards improving the profit and also reducing the concentration risk. With that in mind, what we shifted was, as far as the liability sides are concerned, we are going with the CASA. If you look into the CASA, has increased by about 951 bits, stands at 34,528 crore. The net interest margin is 2.80%, again an increase of around 18 bips year on year. The return on assets stands at 0.85, 340 bips increase year on year. And based on the data what I have gathered from the public domain, I observed that the return on assets amongst the public sector banks, whosoever have come out with the results so far, this is the highest. I will be more happy if there is a need for correcting my statement. Provision coverage ratio has also improved to 87.89 percentage, an increase of 500 bips, while the gross NPA has come down to 12.17. The net NPA has come down to 2.74 percentage, which is a good sign, indicates that there is a good provision coverage. The cost of deposit has come down. The other paining point for the bank is the cost to income ratio, which has come down by about 1,245 bips year on year, but still it is higher. We will be working on to consistently bring down in the years to come. Now, as far as the business mix is concerned, the total business increased by 5.25%, while the deposits increased by 6.27%. The advances increased by 3.80%. It may look that the growth is little less than the industry average. It is basically because what we, as I said, we have been focusing on strengthening the bottom line. So we shifted our focus from the corporate to the retail as far as the advances are concerned. When I shift to that, naturally there will be a little slower growth in the advances, because when I'm shedding the corporate, I'm not taking it. Then that being the case, there is no purpose of taking further deposits also. We were very cautious in reducing our high cost deposits and replacing it with low cost or no cost deposits. Thus, the percentage of growth may look that it is less than the industry average, but it has really helped in building a strong balance sheet. The bottom line has become very strong. The total deposit, as I said, increased by 6.27 and advances by 3.80 percentage. The CASA, amongst the CASA, the current deposit increase is 0.73 percentage, and that is, and savings bank is around 11 percentage increase. Next. Before. Now, advances, as I was telling that we have been focusing on the RAM segment. The RAM segment has grown by about 10.45%, and the corporate advances have come down by about 2.26%. And overall, the mix of the RAM and corporate advance, if you look into the composition, has gone from about 47% to 51% in case of RAM, and corporate from 52 to 49. That is how it has. So this has an effect on the overall increase in the business. Next. And if we look into within the RAM segment, the retail has grown by 15.29, agriculture has grown by about 2.78, and MSME has grown by 13.26. As far as the priority sector lending is concerned, there is a growth in all agriculture. Year on year, there is a marginal decline. I can say it is flat. Regarding the achievement of the mandatory requirement in case of priority sector, agriculture or small farmer, all those mandatory targets have been surpassed by the bank as on March 2020. So this is on the asset quality. You can look into the gross NPA has come down to 12.17, and the net NPA, which was 4.04 a year back, has come down to 2.74, and the provision coverage ratio has increased to 87.89% from 82.89% a year back. The operating profit is 317 crore as on March, and the against 184 crore a year back, and the net profit is 346 crore against 161 crore a year back. The net interest income is 697 crore against 495. So that can be one can look into that. It was 758 crore in December, and it has marginally come down to 697. I will explain that. Basically, it is because in December there was a one-off. You all know that the Air India, which was there, it was settled. So the interest income has gone up because of that one-off. Otherwise, the net interest income during the March also is a good growth. The NIM continues at around 2.9% for March against 2.19 in the previous year. The capital adequacy continues to be very, very comfortable. While the CET1 is 12.77, the Tier 1 is 14.80, and the overall capital adequacy is 18.54%. This is the shareholding pattern. The Government of India holds about 98.25% of the total shares, and the rest are with the small portion with LIC amounting to about 0.62%, and the 1.13 are with other retail investors. These are some of the key financial ratios. The cost of deposits have been consistently coming down as we were shedding the high cost deposits, whatever we had, and it has come down to 4.17, and the cost of funds to 3.48. While the yield on advances is 7.13 against 6.76 a year ago, the yield on fund is 5.69. The credit cost quarter on quarter, if we look into, which is for the quarter of March 22, it is just 0.01% the credit cost, and the slippage ratio is 0.76, which is a good sign. Cost to income ratio, as I said, we are able to bring down from 78% in March 21 to 65% in March 22. The earning per share is 3.39 for March 22. The ROA quarter on quarter, if we calculate and analyze, it comes to 1.1. Otherwise, for the full year, it is 0.85. Return on equity is 25.84% quarter on quarter, which is annualized. And you all know that the bank has embarked upon strengthening its digital transactions. We have floated the unique product, which is giving a mobile and a net banking as a omni-channel for my retail customers, corporate customers, NRI customers. Last time when I met that, I said we have rolled out and we will be extending to all the people. Now we have extended this to all the customers, and it is working extremely well. Thank you. This is in brief I'll be more than happy to interact with my analyst friends. Thank you.
One more information is that bank has declared dividend of 31 paisa, 3.1% for the shareholders. This is another information. After a gap of 4 years.
Thank you so much, sir. And congratulations on a great set of numbers.
Thank you.
Now, we will move on to the Q&A session. Ladies and gentlemen, you will notice a small icon on your screen, a hand sign. Once you press this, it will alert us that you would like to ask a question. We will go around one by one. The analysts, investors asking the questions will be unmuted. I would request you to identify yourself and the firm that you represent before asking your questions. For those who have joined us through audio call, request you to kindly WhatsApp me if you would like to ask a question. We will ensure to take all the questions and we will take the questions in an orderly manner. So with this, I will start the Q&A session. Firstly, we have Mr. Ashok Ajmera. Mr. Ajmera, I have unmuted you. Please introduce yourself and go ahead and ask your question.
You have already introduced me. I am Ashok Ajmera. I am
Yes.
the CEO of Ajcon Global, a very senior broking company and a research firm. Sir, both of you, compliments to you.
Thank you.
For yet again good quarter and a year of a very good result. And what is important is that you have come back on the dividend list, as Mr. Raghavendra I think said just now, after 4
Yes.
years, which is very encouraging, sir. Sir, having said that, I have got a few questions, some data points. Sir, recently you declared Shrai as a fraud account. You know, the 2 accounts of the Shrai group, which you reported to the stock exchanges also. Would you like
Yes.
to throw some light on that? What is going on and what are the recovery prospects? And something about future group to begin with.
Okay. No, as far as the first group of account is concerned, the resolution process is taking place. There is a separate administrator has been appointed. You know that. So that resolution process will take care of that. Regarding the second one group of account, I don't have exposure.
You don't have any exposure on the.
Yes.
Sir, this fresh slippages, I think is 433 crore. You know, compared to the last quarter of 214 crore. Would you throw some light on that? That the slippages, what is there any major account in this? And similarly, there is a major write-off of 1,095 crore, I think, which has never been there in last 4-5 quarters in the bank. So can you throw some light on that?
No, as far as 433 is concerned, I don't have very big accounts. Okay. These are spread in smaller accounts in that. I don't have much of a big account. In fact, for the whole year, when I look into the slippage is around 2,000 crore. Out of 2,000 crore, around 1,300 crore are those which are about 5 crore and above or so. Out of that, again, the 2 accounts which you referred, that itself is constitutes around 1,200 crore. So that way, these are not others are not a big account. Regarding your next, what is that you asked me?
No, on the write-off, sir.
On the write-off. No, these are basically technical write-off. These are basically technical write-off. Okay, which the banks are permitted as this one accounting standards prevalent. So the technical write-off has been done. It is not written off totally from the books. There is a difference between actual write-off and technical write-off.
Okay. So you are expecting good recovery also in the future from the
Yes.
write-off account, just like
Yes,
you
yes,
had
yes.
128
Yes.
from this account.
Yes.
Sir, now coming to the our provision, you know, like it has been stagnant, you know, in last quarter and this quarter. So have we reached to the peak of providing for the slippages and NPAs, or do you want to still go further? Because I think there is a NPA provision is only 8.66 crore in this quarter as compared to 324 crore last quarter. So you are optimally provided for. You don't find any need for.
Yeah, optimally, not only optimally, I have provided even more than what is required.
Can you little bit elaborate on that, sir?
No. In a sense, what I say is when I look into recoveries in the NPAs and the provision right back because of the recoveries and the regulatory provision, what is required for the fresh slippages, when I look into my provision right back itself is more.
Okay. And you also fully provided for the fraud account, unlike many of the other banks which are
Yes.
amortizing for the future.
I have fully provided for all fraud declared accounts.
Even 168 crore in this quarter also you have fully provided for.
Yes.
That the profit would have been still much larger.
Absolutely right. Absolutely right.
How do you look now, say 22-23 from the advances credit point of view? Because we have been little slow, as you yourself said that your concentration was more on bottom line and the profitability of the bank rather than increasing the size, either increasing deposit or credit. So, but ultimately we'll have to venture out. I mean, we'll have to go into little beyond retail portfolio. Also, we'll have to go in MSME, some large corporate credit. So, what is your thinking and what are the plans or some targets for the year 22-23? Your ROE is very good, 0.85%, which is highest in the. I think, as you said, the result declared so far. Even I endorse that. So, sir, but now going forward, especially in the credit portfolio, I think the ED credit is not there today. I think is there or
No, it's not there. It's not there. No issue. Mr. Ashok, good question from you, as usual. What I can say is that as I was telling, the bank was concentrating more on the bottom line, basically because, as I said, I believe that the foundation has to be made strong, and there was a need for a little course correction in the mix of the advances. So we shifted from the corporate focus to the RAM segment. Having said, you may also recollect, even in my last interaction with you, not last or even before that, I was telling that we have not closed the doors for corporate. And I fully agree with you that unless otherwise we do the corporate also, the banker cannot say that you will not do the corporate. Corporate also will be done. Only thing is we will be selective given the strength of the bank, more particularly, see my network, look into my network. My network is mostly in the rural and semi-urban areas. I have a great reach. So I have to leverage that reach, which I can do very well in the RAM segment than a corporate segment. So that is what we started leveraging. It has started yielding the results. Now, having done that, having stabilized, now this is the time that we'll be further going on that and also be on the corporate. So that I expect a credit growth of around 8 to 10% in this year.
any relook on NBFC space and the construction industry on which you are comparatively slow, and also the co-lending, which is increasing very rapidly. A bank like Central Bank has got more than 1,500 crore of co-lending book. So,
Yes.
any thought on that? Any discussions? Any internal? This thing is
Already I have partnered with one of the NBFCs. Besides that, another about 3 companies also almost we have zeroed in. We will be starting with one company. Already the business has started around 400 crore or something. 250 crore has been done under the co-lending so far, and the other 3 companies are also almost finalized, which will be taken on the next faster pace so that we'll be able to build the loan book.
and onward lending, sir, to NBFC.
No, on NBFC also we are not close. We are selective. Now, if you look into our position, we are very comfortable. So we are with open minds.
Okay, sir. And last, if you permit me, on the digital journey, sir, you had already developed, all these platforms and everything. So, how much
Yes.
percentage of the business started now through the digital means, and how much benefit the bank is getting, and what is the roadmap now for the technical spend now?
Okay. See, as you said that we have put a good platform for the digital. As of now, my 84% of my transactions are through the electronic e-transactions. 84% or have been shifted to the e-transactions. Only 16% are through the brick and mortar. Going forward, I expect much more improvement. I'm happy to share one or two things with you that you may recollect that Honorable FM in the budget speech, he said that 75 digital banking units will be established in the country. And accordingly, the RBI and they constituted a committee and different banks were given different locations. Punjab and the bank was given 2 locations and both are in Punjab and the state of Punjab. I am happy to share that Punjab and the bank is ready to go live for the digital banking unit. As and when it will be decided for the nation across all the banks at a particular date. So when they do, we are fully prepared till such time. What I have done is that to get to the feel of that, and if you call it as a trial or whatever it is, I made it as the e-lounges with all these facilities. They are in Punjab state, one in Faridkot, another is in Jagran near Ludhiana.
Great,
Just a couple of days back, I made it available. So that can further be improved. The digital is going to be one of the strong points for the bank in the days to come.
So a parting question on the treasury on AFS book, sir. The pressure you see in the margin now, the interest rate hardening up. Where do you see your treasury income? As it is, the income has come down from treasury in this quarter. I think
Income has come down, but still I am safe. My M duration has come down substantially. I am keeping it, I am managing the M duration. Hence, the hit may not be there. I may not go to the negative trajectory, but the profit has come down. You know the market, how the market is behaving. Today itself, you know how the market has behaved.
so. You can absorb about 50 to 70 basis more point if it goes in June, further hardening
I
in AFS.
will come back to you.
Okay, sir. Thank you very much, sir, for giving all my questions are answered, and all the best to you, sir.
Thank you, Mr.
Thank you, Mr. Ajmera. Thank you. We request if you have any further questions, you may join the queue. If anyone has a question, please raise your hand or use the chat box, the Q&A box to ask a question. Alternatively, if you are unable to use any kind of controls, you can always WhatsApp me your question and I'll be more than happy to take it. Our next question is from Mr. Devesh Kasliwal. I request you to please introduce yourself, unmute yourself and ask your question. Mr. Kasliwal.
Yeah, thank you. Good afternoon, sir. I just wanted to have a bright idea about the current accounts that we have that can actually going forward convert into NPAs, and are these significantly large accounts, or are they smaller ones, looking at the future prospect?
I don't have big accounts which will be having a threat. In fact, if you look into my SMA book, my SMA 2 is very small, which is likely to, which is 60 days delinquent. That itself is around 281 crore. That itself is just 281 crore for the bank of this. So that is negligible. I don't have much of big accounts.
So basically, overall, we don't have that much of a risk, like NPA shooting up or something like that.
Yes, I don't expect.
And another thing that I wanted to ask is what are the measures that we are undertaking to expand in the rural or semi-urban areas? Because there are a lot of microfinance firms that are sprouting largely. So those firms might be a threat to us. So what type of strategy are we using to expand our business over there?
Okay, I don't look microfinance as a threat to me, right? Basically, but your first question of what are the strategies that I have to tap more business from these areas? If you look into, basically my great advantage is the network in these places. Apart from that, the bank is also working on expanding its BC model. Today, as per the RBI guideline, even the BC is an outlet. So we are working on expanding the BC network to a greater extent where I will be able to reach the last mile and tap and serve them and tap the business.
Okay. Thanks a lot, sir, for answering those two questions.
Welcome.
If I'll get back in queue if I have any.
Yeah.
Thank you, Mr. Kasliwal. Our next question is from Mr. Nitesh Panushali. Mr. Banushali, please go ahead, unmute yourself and ask your question.
Hello, am I audible?
Yeah, Mr. Ritesh, little feeble.
You would have to be a bit louder.
Hello, is it better?
Yes.
Yeah,
Much
sir.
better.
Congratulations on such great results. So my question is around cost to income side. So the numbers are higher than 60%. So where do we target to bring that number in next coming years? Because we believe in expanding. Basis what I heard that we believe in for profitability will expand also at a greater pace. So do we expect the numbers to grow up or we'll have some control on it?
No. When I say I will be expanding, see, my expansion will be mostly on the digital mode now. Now, if you look into both the place where I have planned to have the digital banking unit, which are currently in the name of the e-lounge, they are basically tier 2 cities. So going forward, I will be able to, the cost of acquisition of the customer through the digital mode is much cheaper than cost of acquiring the customer through a brick and mortar. So what I will be doing is I will be leveraging the technology, reduce the cost. I will be expanding my customer base, but I will reduce the cost. So that is one strategy. The other strategy is for increasing the income. Increasing the income comes by way of, frankly speaking, the bank is, this bank business model is mostly of the plain vanilla banking. So it is mostly on the interest income. The non-interest income is of a small portion where there is a good scope for the third-party products. So the third-party products also have started yielding. So with the introduction of the digital, I may be able to onboard some other partners where I can get the non-interest income. With this, I expect that my cost will be reduced on the one hand. On the other hand, my income will increase. Thus, the ratio will come down.
Understood, sir. And sir, one question on the GNPA end. So the numbers, even after such reduction, are around 12%. So where do we want to put the number in the 5 to 10% range and something like that? Do we have any strategies to bring that thing also down?
No, it will come down below, around 11 to 10% in a year's time easily. It can come down if you look into that, what I have, the cushion and other things, it can come down. And there are also some of the accounts, the recovery, if you look into today, the recovery is one of the good in my bank. So I expect that it will come down to around 10 to 11%.
Understood. Sure, sir. Thanks for your time. I'm done with my questions. Thanks.
Welcome.
Thank you, Mr. Banushali. Our next question is from one Mr. Tejpal Jain. Mr. Jain, request you to unmute yourself and go ahead and ask your question.
Hello, am I
Yeah,
audible?
Mr. Jain. Yes, very much.
Yes.
Yeah, good evening, sir, and congrats for good set of numbers. I've got two
Thank you.
questions. One is,
Yes.
which are the big accounts that can, I mean, say we are looking from a NPA perspective. So, which are the big accounts that can convert to NPA currently?
I
And
don't have big accounts
okay,
which
okay.
are expected to become NPA.
And sir, given the fact that the inflation rate is going quite high, how do you see the retail portfolio shaping up going forward?
This is a macro level
Yeah.
inflation, right?
Right.
Hope that all are taking necessary steps. And I don't expect to see the retail. Basically, if you look into the retail people, by and large, though there are inflation and other things, they try hard. As far as the credit discipline, I was telling that the credit discipline is very good in our country still. Okay, but there will be certain strain if the inflation is very high, if they are not able to generate the cash flow is affected. But inflation alone is not going to stop all those things. There will be activities. I expect that now the pandemic being behind us, the last year we had hell of that time. Now that is almost over. I hope that the activities will be back to the normal and we will be able to face this challenge also.
Okay, sir. And internally, what target we have set for NAMS? What range we are planning to take it like going forward?
As far as credit is concerned, that we will be growing around 8 to 10%.
Okay, okay. And any major from RBI policy that you think will be shaping up the credit and the deposit
No,
macro
I
scenario.
don't expect as of now.
Okay, sir. Thank you, sir. That's it from my side. Thank you.
Welcome.
Thank you, Mr. Jain. If anyone now wants to ask a question, please use the raise of hand tool in your toolbar, or you can use the chat box to ask your question. Alternatively, you can also WhatsApp me if you have any questions. We will give it a moment. Mr. Ajmera, if you have a question, your hand is still raised. If you have a question, you can go ahead and ask.
Sir,
Yes, Ashok.
yeah. In this second round, I would like
No
to
issue.
discuss little more in detail the point which I left earlier. I mean, because I had asked a lot of questions in the first round, is basically on the treasury part. You know that some shifting now from there to, if your loan book is increasing, I think you might have to. In fact, I just want to understand from your treasury GM that how is he planning now this current year, because a lot of things are happening. 40 basis is already hardened up. RBI has signaled today that we did not want to give a shock in June, major shock. That is why we have raised this rate in between. So what is our planning? Because unless you simultaneously grow your loan book, you are not going to be anywhere. In fact, rather you are going to lose.
I agree. I agree.
So
That is what I said. There will be a credit growth. I said there will be a credit growth. And see, as far as the credit growth is concerned, for me, the funds is not a constraint, the capital is not a constraint. My CD ratio is still around 69 to 70%. I have a good scope to increase. As far as the treasury numbers and other things are concerned, I will ask my GM treasury to be in touch with you. Okay.
Okay, sir. Sir, now something on this NCLT resolutions, and any you would like to throw something like what is in the pipeline immediately, and how much recovery can we get from some of those resolution accounts, and the kind of provisioning which we have done on the already the accounts under resolution as per the note number, I think, 10. Where do we see how much percentage of this can still further slip?
No, see, as far as the NCLT is concerned, I have made a provision of around 96%. It's almost as good as 100% overall NCLT. Okay, if we talk of the RBI list 1, list 2, and the cases filed by our bank, all 100% have been done. And the overall average comes to 96%, where we also find that where we have not done, there is a good scope. There is no need also. We have slowly built. That is what I said. 96% is a good number where the provision, as far as the provision is concerned. Okay, so we don't expect any much of this one stress from that point of view. As far as the resolution which is expected is very this question which nobody will be able to answer at this point in time with what will be, but major account, I mean, the accounts are being the work is going on, and hope that there will be a reasonable recovery during 22-23.
Sir, as the feeling is cropping in among the bankers that NCLT route is not yielding the kind of result which it was expected, except the initial few large accounts which have been settled. And more bankers are going towards the OTS, one-time settlement, negotiated settlement, rather than going to NCLT and then waiting for not only 270 days but beyond that. So what is your policy in your bank, that you are more inclined towards the settlements, or you would still prefer to go to NCLT?
See, one thing is, as far as my bank is concerned, my large ticket accounts now left out, which are likely to go there, or as good as nil, right? As of now, I don't find that any the big account is likely to create me a problem of knocking the doors of NCLT as of now. So that question does not come to me now, but these are individual cases. Based on the individual cases, the banks will be taking a call, keeping in mind the time value of money.
And what is the status of NARCL? Any change in those accounts which were identified and to be transferred to?
No, as of now, it is there. So as and when they start, it will be changed. It will be transferred.
See, in this quarter, I think something is
Expected.
definitely happening.
Expected in Q1.
Sir, I mean, I think you answered most of our questions, and thank you very much for giving this opportunity once again. Only if you permit me, our CASA, the base is still, very low. Though the growth is there in that, like 32.63 to 33.81% of the CASA, this thing. So, I mean, what are the long-term plan to make it as a pan-India kind of a thing, and exploring some markets for increasing our CASA?
See, Mr. Ashok, one thing I should personally thank you, because you are one of the few persons who closely monitor and have frequent interaction with me also. As you observed that the CASA has improved, though it may look at a lower pace. But again, if you look into our CASA are the real retail CASA, what I have. Okay. And your question of what is the strategy, how we will be expanding to the territory where I am not present, the bank is working on those expanding the network, particularly to the places where we don't have a presence, rationalization of some of the places where I have. And going forward, I strongly believe that we will be focusing more on a digital unit than the brick and mortar.
All right. Thank you very much. And all the
Thank you, Mr. Ajmera. Thank you for your question. Since there are no further questions, I would like to hand the floor over to the management for their closing remarks. Over to you, Krishnan sir, for your closing remarks.
Thank you, Mr. My friends, analyst friends, thank you very much for sparing your valuable time to come over this. I'm sure that the whatever clarifications were required, we were able to. And I can say that the bank, as has demonstrated in the past 5 to 6 quarters, we will be doing better, and hope to meet you in the next quarter with the good results. Thank you very much.
Thank you, sir. Thank you, everyone, and have a great evening. We shall see you next quarter.